Hi, welcome back to longevity in merciless markets. We've been talking about trading strategies across different instruments, but my session, I'm just going to talk to you about the state of the market currently and what is the key drivers that will matter in 2016. So, without any delay, let's just go on. Let's talk about first, for those who missed the disclaimers at the beginning, this is not a recommendation. It is just for educational purposes only. We accept no responsibility of any use or misuse of our materials, and we own the materials. Uh, I am V. I'm the founder and CIO of TrackRecord Trading Academy. We launched in 2016 to bring all the sum of my experience in all the various banks around the world into a trading framework that I first supplied to proprietary firms, hedge funds, and banks as well for their professional traders across different trading desks. I started my career in London, then I moved to Singapore and Seoul, and then Hong Kong as well, and then New York as well, where I started a hedge fund with my ex-boss at the time. It was $1 billion hedge fund with a focus on global macro trading. So anyway, this is about track record. We founded it to bring tailored trading programs to bring the I guess the Wall Street expertise to Main Street, and we also provide real life guidance for current and future market conditions. And you can sign up for. I think if you are watching this, you sign up for this. You are already automatically signed up to our daily insights, which we write about the markets and what we think is driving the market, what we think is driving the markets, or what will be driving the markets. Today, we are going to talk about the state of the markets, and then we're going to talk about what's going to matter going forward. I think we all know the state of the market is pretty confusing. It changes all the time. But since Trump took office, we have seen S&P 500 rising nearly 16%. Of course, this chart is good as of 29th of January, so things have changed as well. And the US 10-year bond yields, which is the bond yield, the interest rates that the government borrow at for a 10-year period of time, it's dropped by a quarter, slightly more than a quarter of a percent. It's called 28 basis points. And the dollar index, which is an index of the US dollars against the major developed currencies, major trading currencies, it's dropped by more than 10% since Trump took office, right? And so we have seen gold as of again 29th of January. Gold has risen almost 100%, but after 31st of January's correction is substantially less, but still double digits and still quite high. So we have seen nearly a doubling of it, and it's still very volatile, but it encapsulates what's been happening in the last 1 year since Trump took office. And silver has risen up to nearly 300%, but of course it corrected as well. But still, 200% is no mean feat, right? So something that's quite interesting that is not usually on people's radar because it hasn't really been doing much but grinding higher is dollar yen. Dollar yen has been going up, but that's because both uh, the uh, dollar and yen have both been weakening. But over that period of time since Trump took office, there's big volatility, but net it's only been down like 1 to 2%. And it's not a big deal because both these currencies are racing to the bottom. So, Japan bond yield, something that is not on many people's radar, has quietly risen more than 1%. And 1% may not seem like much, but it is huge when your initial rate is like 1.19%, right? So it's nearly doubled since Trump took office. And of course, it's not that something that Trump has done is mainly the policies of Japan, but I bring it up because it's quite significant that in the year forward, right? Japan bond yield, 40-year bond yield, which is the longer duration that they borrow, 40 years, has risen from 2.7% to at one stage, few last week, it was above 4%. And the moves in this market has been extraordinary. It's in one day it has moved the amount that it has moved previously in months and years, right? So this is something that has gone unnoticed by most people who just trade global macro, and it's starting to be important, but we will not have time to delve into this because there's a lot of factors that I want to talk about. But I just point this out because sometime in the future there will be volatility that is going to be triggered because of this phenomena, these things that's happening in Japan, where they are struggling with keeping their bond yields under control, and they have a massive a currency that is extremely weak and continues to weaken as because of the policies that the government is implementing and the central bank is implementing. So this is something to keep in mind, such that you won't be one of those that are very surprised when some crisis happen because of something that's happening in Japan. Okay, but those were the key drivers of 2025, key movers of 2025. But the key drivers has been mainly been out of US monetary policy, which is the US Federal Reserve conducting their interest rate policy, and trade tariffs from Trump since he started his second administration. Of course, this is not something new. Trump tariffs is still influencing markets, and geopolitics in the Ukraine-Russia war, the Middle East, Iran, Israel, Gaza, all these things have been driving the moves last year. And very importantly, something that is not triggered by Trump or the US alone is the race to get artificial intelligence supremacy, right? So first, quickly talk about US monetary policy. In September last year, the Fed resumed cutting interest rates, and they cut a total of three times, three consecutive cuts from September, and they paused. The last cut was in December, and they just paused in January, right? So what's expected for 2026? We have to look back first to the December meeting, which is when they publish their summary of economic projections. This is when all the board members, not just the voters, there's 12 voters, but 19 board members altogether. They have no votes, but they still submit what they think as the summary of economic projections, right? They project what's the interest rates, what's the inflation and growth, and all the things that matter to these policymakers, right? So that in this dot plot, some people call it dot plot, but it's in the summary of economic projections. There were three ultra hawks, meaning they're extremely hawkish on the hawkish end of the spectrum in the committee, right? The median projection was for only one cut of 25 basis points in 2026, but three people think that will be a one hike, right? So this is extremely hawkish when everybody else think the median members think, okay, we are going to cut one more time. And there's four slightly hawkish guy who says there's no change. No change is slightly hawkish when median projection is a cut, right? So centrists, the four median people think when you look at it, it's one cut only, right? So this is projected to start sometime in June, July, depending on what economic projections that they have. There's four doves who want two cuts, who thinks there will be two cuts this year. There's three ultra doves who thinks that there will be three cuts of 25 basis points. And there's one super dove who is basically put on the committee by President Trump, Miran, and he wanted a total of 150 basis points cut, right? This super doves when most people are thinking it's around one, maybe two. This guy thinks there's seven cuts, right? No, he thinks there's six cuts, right? Six cuts. That's a lot, right? That's double the next closest person. And he sometimes calls for 50 basis points and 75 basis points as well. But we'll go into that later. But for Trump tariffs, although it's now actually a week ago, it was still quiet, but since then he started threatening tariffs again. But there are some deals that are ongoing. US and China deal supposed to be going well. US and Korea, Trump just threatened them with more tariffs because they haven't delivered on a promised investment. US Japan actually hasn't also delivered on the investments of $550 billion, but they claimed it's going to be in progress. And more importantly, the whole thing hinges on a court decision by the Supreme Court, which is the next possible ruling is 20 February this year, right? So next month, there could be a ruling. We're not sure, but we'll see. So if they rule illegal, then there will be some market volatility around that. Okay, so the theme that's on most people's mind, most talked of in the markets, in the stock markets, in the stocks is artificial intelligence. I think a year ago when a year, I think 2 years ago when we started talking about this, we seemed like a bit outliers talking about artificial intelligence. Who cares, whatnot, right? But I think since the launch of GPT, it's become very obvious that it is a good thing. But and it has brought about unprecedented productivity gains that has not yet been shared. It has been, it is now doable, but most people still don't know how to use it. Besides thinking that ChatGPT is just a very, very clever Google, sometimes lie to you, sometimes make things up, but just chatbot, right? You can have a conversation, that's it, right? But there's many users that has been helping those who are implementing it. But eventually, it will be disinflationary, and the thing that drives it is not just about US and China racing for supremacy with tariffs, with just sanctions and all. But now, lately in the press, in the last few weeks, especially, is about fears of valuation, overvaluation. Okay, so all these things were driving the markets in 2025. Some of it will continue to drive markets, but let's get a status update on how it's going to be driving markets, right? So what we have here is a very volatile market. Again, this doesn't include the things that happened on 31st of January, Friday. What has been driving the markets is it's just headlines. Sometimes it's just headlines out of randomly. Some people said something. Of course, the policymakers make a comment, or even a company says that they will invest in another tech companies. It goes. What we have seen. This is a chart of volatility index, VIX, which is a measure of US stock market volatility. As you can see, there's quite an orderly horizontal, you can draw a horizontal line around it, which is around like 16, so 16, 17, which is when markets are orderly, the markets are not doing too much that is shocking people. But all these spikes higher, they're usually because of sell-offs, right? When sell-off comes, that's why it's called a fear index as well. When sell-off comes, as you can see, these were huge sell-offs in last year. But this year, we have all these mini sell-offs, right? Which lasted just 1 or 2 days, right? Just you can see intraday spikes. If you can see on your screen, if it's big enough, you can see the wicks on these candles. They spike intraday from 16 to 20, which is near to fear levels, and then it comes off by the end of the day. So we've seen a lot of these moves just in January alone. Is like 1, 2, 3, 4, including data for 31st of January, will be another one as well. So what has been happening is that a headline comes out or something triggers an intraday move, the market sells off, fear increases to a level that should worry many people. Then by the end of the day, it recovers, but deep buyers comes in and it's all over within hours or days. This is something that is not often happening. As you can see, the previous spikes in last year, they persisted over a number of days before it calms down. Usually is President Trump comes out and change policy and then calms down, right? So what we are seeing is shorter spikes, recovery from the spikes. So, and back to the fundamental drivers. Key drivers, again, it is US monetary policy, but with so few rate cuts projected, it is more of a question of who is on the board and who will deliver these rate cuts. As you can see in the September projections, there is a dispersion of views, right? So we'll talk about that. But another thing that continues to drive the markets is Trump tariffs and geopolitics. This is all driven by essentially one person in the world and other people's response, other nations' response to him. And politics is going to be quite important going forward. It is important in election years, and this will be a midterm election, so we'll talk about that. And again, artificial intelligence, how it will drive the markets. Okay, so US monetary policy and Fed independence. Fed is data dependent, but this is about the credibility of the Fed. right? Currently, now they have said they're data dependent. In the January meeting, they kept interest rates unchanged. They said the risks to the dual mandate. The Fed has two mandates. One is to keep employment at the economy at full employment as long as there's no inflation, right? The second mandate is inflation to be kept around the 2% mandate, right? So that's it used to be below, now then it's around an average at there. So it's kind of vague, but 2% is their target, and we are still above the target. But they said that it is not accelerating upwards, so they project it to come down to 2%. And then they said the economy, the jobs market is non-hiring and non-firing, right? This is just not too much job growth, but there's not many people getting fired as well. But I think that will change, right? Because of AI and other stuff. But the what's critical for the Fed this year is the Chair Powell's terms ends on May 26th, right? May 2026, right? So in May, he steps down, but he still remains on the board till the end of January. So the question of who is going to replace him was answered yesterday, right? There's going to be Kevin Walsh, a candidate nominated by President Trump, is going to take over. What usually happens is that when the chairman terms ends, the chairman steps down from the board so that the president can appoint the next guy he wants, who is not already on the board, to take over his role on the board, and then he can then be elevated to the chairman status. But so the question is, will Powell stay on the board to thwart Donald Trump, right? To stop him from challenging the independence, to stop Trump from putting too many of his own people on there. So this is why there is a Lisa Cook lawsuit, right? So in case uh, uh, Powell decides not to go, Trump wants to remove Lisa Cook right now, right? So this lawsuit, so she has a lawsuit against her where she is now she is being sued for mortgage fraud. So there's a rule where the president can remove the Fed member only for cause, right? The cause would be something that needs to be argued upon. The Supreme Court has to rule on whether she is liable for something that she did before she became a Fed member, and is mortgage error. She claims it's an error in filling the form. Uh, Real enough of a cause to remove her from the board, right? So, but what the Supreme Court also is ruling, possibly on 20th of February, is whether Trump is allowed to remove her from the board while the case is ongoing. So the lower courts stop him from removing her. So he wants to remove her as time just before there's a verdict on her mortgage fraud, right? So that's something really important. If she is allowed to stay, then Trump has to figure out how to get his candidate onto the Fed board, right? Somebody has to resign for him to get him on, right? That's also why I think there's a criminal investigation into Powell's handling of the renovation of the Federal Reserve headquarters. And because of that, all these things, right? And I think Powell was quite strong in his response when this criminal investigation was launched. He published a video saying that it is a challenge on the credibility, on the independence of the Fed. So I think he hasn't answered any questions about whether he will stay on, and he refused to answer the question in his latest press conference as well. But I think there's a strong likelihood that he will stay on. Historically, the previous chairperson tend to resign to not appear to have an influence in the leadership of the next chair, right? So that's tradition. But I think, as we know, what is tradition and what is normally accepted is now thrown out the door in this Trump administration, right? So moving on, Trump tariffs. I apologize if I'm speaking a little bit fast because it's Saturday afternoon. We did not allocate much time for me. So this is just a concise overview of everything that is important. So Trump trade tariffs, any nation is at risk of more tariffs. So again, the previous playbook, friends and family is okay. Friends and family of Donald Trump is likely to be in the positive camp, but allies and friends of the United States have found themselves on the wrong end of the stick as well, right? In case of the tariffs on Europe because of Greenland, this have thrown a lot of disarray into the world order, right? The world order as we know it have completely been disrupted and I think destroyed in the process. But so even if, which is the case with most Trump tariffs, they eventually not get in, they don't get implemented eventually. But he has this tendency, and he is likely to continue to threaten the worst tariffs at the time when most unexpected, and then try to make a deal with the counterparty, right? So this is going to be a persistent feature of this year. And then the geopolitics side would be, as we have seen, Trump again broke protocol by launching a military operation to remove the leader of the nation to stand trial in the US and then confiscate the oil supplies. And there was no real response from anybody really, right? United Nations, NATO, Europe, Russia, China. Basically, they just had words, and words don't mean much to the US president when he can do whatever he likes. Then, as we've seen, he wanted to take Greenland, and then he launched tariffs and then threatened tariffs and then said no tariffs within the next few days. So the question is, who's next? Likely, he's going to go after Cuba. There's noise of him going after Cuba. Of course, there's the Iran, the perennial issue of is he going to into Iran anytime soon? So in fact, every weekend there is a premium, there is a fear premium price in the market of possibly this is the weekend that he's going to overthrow the regime in Iran, right? And if you watch betting sites, you'll see that this probabilities changes and trades quite actively as well. So then also there's Canada. Canada is clearly on his crosshairs as well. He's going to threaten them with some things, and he has already threatened them with tariffs if they do a trade accord with China. So all these things will continue to drive to generate headlines that will drive market volatility, right? And politics, which is something still not on the radar of many people yet. In March, the primary seasons begins. This is when the two main parties decide on who are the candidates to run in the US midterms. And this is especially going to be an important year in terms of politicking, in terms of showing who is better for the US of A, is because this is the 250th anniversary of the founding of the United States of America. So on 4th of July, there's going to be a huge celebration. And in advance of that, there's expected to be many politicking events, right? So to show which party, which candidate is better than the other. And it all culminates in the midterm elections in on 3rd of November. So all for the 435 seats in the House are going to be contested. 35 seats in the Senate will be contested. So this could change the balance of power, right? Right now, the Republican Party has the majority in both chambers, and they are also in the White House. So they tend to be able to force through some policies, right, that just require a simple majority. But if we lose, if the Republican decides, if we see that the Republican Party loses the majority in the House, then the next 2 years, Trump cannot do as much as he wants, right? He just cannot be as forceful as he is currently doing implemented policies, right? So that would start to come into play, I believe, as the primary season begins and as we start towards the mid-year, things will start to be more about populists. Right now, a lot of Trump's policies are outward facing, that he's taking on a lot of people out, a lot of nations outside the US. But recently he switched tact as well. He started talking about affordability. He started talking about making credit card interest rates at a ceiling. He puts a ceiling on it so that nobody has to pay above a certain percentage of interest rates, right? A certain percent of interest rates. So this helps a lot of US consumers because most of them are living on credit card debt. So this will start be something that is going to start to come to the fore. He has already spoken about affordability of apartments, houses because big investment funds are buying them, and he wants to make it illegal for them to buy so that private individuals can afford a home, right? So these are the drivers that will start to come into play as the year progresses. And also artificial intelligence, right? So AI, everybody knows what AI is, but the question on everyone's mind is the bubble about to burst? Does it burst anytime soon? So is it over investment? I think everybody who thinks it's over investment, which is quite a lot of people, right? A lot of skeptics around. I'm not sure if any of you use AI beyond just large language model, which is LLM, which is like ChatGPT, Gemini, Grok, uh, Perplexity, all these LLMs, right? If you just use it for a clever chatbot, then you will tend to think that it is over investment because how can this clever chatbot, deliver on this hundreds of billions of dollars being invested, right? But uh, we are talking about hundreds of billions of dollars being spent. Likely this year, and in fact, it's already starting to happen, trillions more will be spent, right? And this is not just me talking, right? Not just some random dude in his home talking about, oh yeah, trillions, right? This is not just me, right? It's a lot of experts, and the primary expert in this spending is the guy who runs the CEO of Nvidia, who sells most of these chips to the world. He sees trillions in AI spending ahead, and trillions is something unimaginable, right? And I think many people believe it is a bubble because historically, when a new industry pops up, many people spend a lot of money building infrastructure. It's happened, right? We've seen the railroads, we've seen the internet boom, right? The dot-com bubble as recently as the start of this century, right? So everybody believes that it is a bubble because it's usually never different, right? Usually that's everybody hype up. They think, oh, this is all great. Let's all just spend so much money because we're going to recover so much money. Much like the sale of Spectrum. If you're old enough, you'll remember they were auctioning Spectrum on mobile phones uh, to companies, and huge amounts of money was spent because they think, oh, everything will be done wirelessly through the air, and all this eventually turned out to be bubbles, right? But why is it this time different? Of course, the old adage in markets is that it's never different. It's always going to be not different, right? And people who say it's different this time tend to blow up, and that's why it's always a bubble. But I think this time it's slightly different. It's going to be significantly different, actually, significantly different from previous spending because this time the spending will be repaid in productivity gains, right? And this productivity gains is already happening. It's just that most of us are unaware of it because it has not yet reached us. We have not yet delved into it. It's there available for the taking, but nobody has done it. And those people who have done it themselves are not telling you how to do it, right? They're just doing it and crushing it, right? Most work that you do can be done in a matter of minutes. Okay, so even my personal experience is that many things that takes me weeks before, I can do it in a day or two, right? Because of artificial intelligence. But this is a very huge topic which I will talk about in a later webinar as well. So to get invited to the next members only webinar, we conduct webinars talking about themes that drive the markets and how we can position ourselves for it. You don't have to join the membership program. The membership program is $89. There's no sales pitch. You don't have to do it. I think just come to the next webinar if you want. But all you need to do is get our newly released ebook. It's free if you have Kindle Unlimited. If not, you can get it for the price of less than a cup of coffee. You write us a review, you screenshot it and send it to us. And you will be given the invite to our next webinar where I will expand on all the themes that I highlighted. Of course, in my 30 minutes, I can only highlight to you what will be significantly affecting the markets this year. And of course, this is also likely going to change, but these are the core themes that I believe will persist, and how it affects the markets will change. And we'll talk about it in the following webinar as well. So, yeah, so let's do some questions so that we can all go back to our lives on a Saturday afternoon. Uh, cool. Please send me some questions. I have to look through the questions myself. So just give me a bit of time. Okay. So there's a question here. Let me see. Okay, we have a bit of a 5-10 minutes for questions. So about the Japan, right? Okay, so how is it significant? How will it affect? Yes, I brought it up. I think most people will be just ignore it, like Japan has nothing to do with me. But in fact, it was for 1 or 2 days, it was driving global markets. And I think most people probably, besides a headline or two in the press, it was largely ignored, right? There was a day where, if you refer to the chart where I showed the 40-year bond yield, the bond yield exploded on that day, broke above 4%. Historically, record highs has never been there before, and it's caused a sell-off in all major bond markets, right? Not just US, all the other, because if interest rate yields is so high in Japan, why do you want to invest in other places where it's not as high, right? So they compete for savings as well. So uh, it will be something that can trigger banking crisis in Japan or flight to quality. That's why it's also the day, on that day itself, we also had the stock market selling off globally. Most people couldn't pinpoint the answer as to why. And that caused instability because the Japanese government needs to borrow a lot of money to fund their spending plans. And that's quite reminiscent of what happened in the UK when they announced a tax cuts that couldn't be funded. So the bond crisis could then start to affect a lot of peripheral markets, and it could trigger investment funds or hedge funds going into liquidation. So this is something that we need to watch out for. So for Japan, there's two things that is quite significant. Their weakening currency, which recently we had the US and Japan talking about it at the same time, and then they did this exercise of checking FX rates. And for people who have internet, it'll be like, why are you checking FX rates with banks? It is the precursor to actually selling dollars to intervene or buying dollars to intervene. So this time, the risk is to sell dollars to intervene. So anyway, again, it is something that should be on your radar. Not yet that important in the scheme of things. As another question here, talked about US economic policy. Yes. What about the impacts of US domestic economic situation? Yes, you are exactly right, Lance. It's a living cost, all these things, right? All these things are causing a lot of angry Americans, as you're right. The ICE actions, the protests, they're starting to, it can be ignored, right? It can be ignored when it's not election year, right? You as a politician, you're like, okay, whatever, we just send in the troops to keep them under control, right? We send in the ICE, keep them under control. We don't care. We just do some airbrushing of the news. It's okay, but in election year, it starts to become important. So the president will have to start listening to them, and that's why you're exactly right. He's talking about living costs. He's trying to bring down the cost of credit card interest rates. He's trying to bring down the cost of homes, which are the two key things that worry people, right? The average American has a lot of has to buy a home. They cannot afford to buy a home, or then they have to pay high rents because of that, or they have credit card debt from student loans as well as all sorts of debt, right? So he's trying to bring down interest rates for that reason. Okay, another question. The Supreme Court ruling on tariffs will it trigger a bull market? I think we are in a bull market. Will it continue? I think uh, there's very few things that is on my radar that can disrupt the bull market in the longer term, right? So in the longer term, the bull market is very much intact because the drivers driving it, the underlying drivers are very strong, right? But in the short term, there will be a lot of volatility. So to your question, sir, is that yes, it could trigger a short-term strengthening of the rally, or maybe even trigger a short-term correction, right? Because it is quite significant. The Lisa Cook case, as well as the um, if Lisa Cook is allowed, the Supreme Court allows the president to remove her immediately while pending her trial on about while pending the case of her mortgage fraud, then he has another person on the board. Of course, the person on the board currently that was put there by him claims that they don't talk about interest rates, but who do you believe? Do you believe him or do you believe Trump, right? Who says that let's cut now, right? We need to cut more, right? It's already too late. And then this guy turns out at the council and he's the most dovish of everyone. He's a super ultra dove compared to everybody else. So I think yes, if he puts another person on there, then there will be controversy. There will be, and the credibility of Fed is something that everyone has taken for granted for decades, right? So it's something that it's quite unprecedented. Okay, so here, a question here, very good question. I guess we have the crypto audience among us today. It says crypto seems to be over in the mid long term. Uh, I guess when you say over, it means it's game over, right? Is that what you think? Because Clarity Act doesn't get many support in the recent last voting, and it's quantum risk. What's my view? Okay, so this is very specialized view, right? Quantum risk. I'm not a quantum science person, right? The closest I've come to quantum is I watched this series called Quantum Leap. It's they did a remake of it. For those of you old enough, you probably know what I'm talking about. But the risk of quantum computing is that it will break all cryptography as we know it, and then Bitcoin and all the cryptocurrencies which is based on unbreakable cryptography would be considered useless, right? So right now, not to be technical, but the Bitcoin community is working on quantum proofing Bitcoin. I'm not sure. I don't have enough knowledge to know if it's scientifically, theoretically possible, but they claim that it is. So yes, it is always a risk, but this is not just a risk for cryptography in cryptocurrencies, right? It will be a risk for all passwords that you have, every security thing that requires code like typing your password, putting your fingerprint, all those will be at risk. So even your bank balances may not be safe. Of course, it's safe because we think that the banks keep paper ledgers to record what happens, right? But I guess it will cause havoc if quantum computing comes into the wrong hands. But to answer your question, I have been a bull on the main cryptocurrencies, Bitcoin, for years and years. And for the first time, I'm worried as well. I'm wondering why it's behaving quite strangely. It doesn't go up when most things go up. It doesn't go up when most things go down. So it doesn't seem to be a case where it's going up, except at the very beginning of the Trump administration. And there's a lot of mainstream news that is increasing adoption. But to Of course, in the earlier presentation, we had Carl, right, telling us about crypto, the reason you have to watch the PMIs, you have to watch the economy and all. I've not done enough work to know if that's the key drivers, but it does make sense in some ways. But I also have an idea that one of the reasons why crypto is behaving so poorly is because we have never seen before in any crypto cycle seeing old wallets, historical wallets that got into cryptos very early, like they have bitcoins that are worth billions of dollars. they are starting to unload, right? And what you have seen, so this would be very specialized knowledge for those who know cryptos. What you have seen in this cycle is that privacy coins, so means those that the coins that are uh, makes it harder for you, for people to trace where this crypto comes from, where it's going to. Monero, for example, right? All those crypto privacy coins, those are doing well, right? I think the historical wallets are transferring into these coins to remove traces of where it's going, where it came from, because they are starting to cash in or thinking of. There's two reasons. I think there could be two reasons. They're trying to avoid future taxes, or they are trying to avoid being captured by institutional holders, right? Because as you see, institutional holdings continue to grow. Sovereign holdings are starting to grow. Banks, states in the US are starting to accumulate Bitcoin. This should cause Bitcoin to go up, right? But I think what is happening is that the the original holders, the guys who hold Bitcoin, they did not want this to happen, right? They want Bitcoin to be something that's quite independent of any system. But if you imagine BlackRock, the US government and governments around the world holds the majority of the Bitcoins, then it becomes quite difficult for you to be considered an independent node again, right? Because and a lot of holders that are currently coming into Bitcoin, they are not buying Bitcoin on crypto exchanges or whatever, right? They are all buying ETFs. They are buying ETFs. They are buying micro strategy. So in the end, Bitcoin becomes concentrated in a few hands, but the rest of us are all holding paper notes that say we have an ownership in the Bitcoin in somebody's hands. So eventually it becomes we are holding a piece of paper saying we own something that the bank owes, a central bank, a central authority owes us, right? Against then it becomes a paper currency as well. So I think this challenges the tenets that those people, the original holders, believe in. This could be the reason why they are exiting. Of course, I'm not an original holder. I'm not the OG, right? I'm not OG in this. I don't know what they're thinking, but what I'm observing is they are all selling out. Not all, they are mostly. There's some of them are selling out. Okay, I think I have overrun my time. Let me take one final question. Okay, this is an interesting question. I guess it's somebody who's been in our community a long time. But what are your wellness secrets to remaining so youthful after many years of undergoing stressful trading? So this is no app, beauty app. This is how I look. It could be I always look tired like this. And I'm running on, I believe, only 2 hours sleep today. Quite 2 3 hours sleep for most of the weeks. So that could be the lifestyle secret uh that is the key to looking youthful, right? I basically always look youngest in the room most of my career. Now not anymore, right? But just to sum it up, drink lots of water, get sleep, but concentrated sleep where you rest really well, switch your minds off. Uh, and okay, thank you for someone who has read the book. Please continue to refer to the books. I think this book, Survival Metrics, would have been extremely useful for this week of trading, which is I think, as people say, years happen in days during the Trump administration, right? And this trigger of gold and silver selling off may not be related entirely to his policies, but it's starting to become a feature of this few years. I think it's going to be the next 4 years. We're going to live decades, and actually, it is going to be the changes that uh, we are going to see uh, decades of changes, the paradigm shift of the AI revolution. Don't lose out on it. Don't uh, don't miss out, right? Don't dismiss it. Uh, Trust me on this. Go try to spend some time learning AI every day. Uh, okay, so two more comments. Then I have to let you go. One guy says how to you cannot get a book from Amazon. We don't have we don't have real copies yet. We are just launching an ebook. You can click the link. I know if you go search on Singapore, Malaysia, or some countries, Singapore, Malaysia, you will not see it's an ebook. It doesn't. You cannot buy it from the Malaysian site, but you have to click our link, and it links you to the US site, which you can buy the ebook. Right? It's the same thing. But for some reason, it's something that Amazon has that we cannot change. Okay, final question. Will the uranium sector benefit significantly from AI expenditure? I I'm very impressed with this question because this is exactly what's going to happen. So in my discussions about AI, I think we're going to have to talk about what else is going to benefit from AI. So if you read a lot of what these guys who are the most in position to know, you'll know that there are bottlenecks, not just in like chips. I think you can see from memory, there's bottlenecks in memory, but these are just the obvious hardware, right? There's going to be bottlenecks in energy, right? It's going to be a race for energy, and I think that's why also that's partly the reason why Trump decides to take the Venezuela oil fields, right? He just basically say, let's just go take it, right? Is nobody's going to stop us. We need energy to win the supremacy, to win the war for supremacy in AI. You need energy, and the bottleneck at some stage is going to be energy, and it already is. And if you look at the the data, China is building massive amounts of capacity to produce energy, right? And that's what's worrying the Trump administration. If you cannot compete on that front, it doesn't matter if you have a lot of chips. uh, Even you have so you can stop the flow of super chips from going to China, but they cannot stop them from having less efficient chips, right? So the problem with less efficient chips is just that they do it with more chips, with more energy, right, and more space. So space is not something that they lack of. Energy will not be something that they lack of. So they can compete with you even with slower chips, less efficient chips, if they have a lot of this, right? So I think that's where it's going to drive it, right? So the uranium question person is anonymous, but it's a great question. And I think if you see recently, uranium stocks have been starting to do really well as well. Uh, okay, so I'll end it at this and let you get back to your lives. But thank you for spending your time with us. Do take the time to read Survival Metrics. I think it's going to be very helpful. It's about how to survive in market conditions that are unpredictable and markets that are volatile, such that you can implement the strategies that you find. So we have shared a few here that can help you be so I like to say you need to survive so that you can thrive, right? The problem with trading is not that it's difficult to make money. I think it's yes difficult to make money, but sometimes it's easy because you have an edge, right? But the problem is it's even easier to lose more money, right? And in VIX like this, market conditions that we've seen, it's quite easy to lose all your money in one or two trades, 1 or 2 days. So we need to be to have survival metrics like how to survive for the longer run so that you can let your edge persist and then make your money. So as I always say, stay true to the process and eventually you will be very profitable. Thank you very much. Thank you for spending your time with us. All feedback and comments welcome. Please send us an email or the contact us through the links that Sue has put in the chat. Thank you very much. Scan this code and sign up for our next webinar where I'll talk to you about more about the drivers, right? Hopefully it's brief, but good enough to give you a roadmap on how to navigate through this year. Thank you very much. Sign up for all the follow-up emails. Just drop us an email if you have questions. Take care. Bye-bye.